Hey everyone, as much as we think that we are going to see more seasonal volatility here over the next month and a half or so as we head into the election, I also think that we need to be aware that it's from a macroeconomic perspective, things are certainly slowing, but it looks unlikely that things are completely falling apart, which is why we still think that our base case has to be that we're going to see some sort of a reprieve, some sort of a rally, at some point later on this year. And although that's a bit consensus now, and that's the one thing that I'm concerned about, that's like everyone's talking about that, the history also suggests that that tends to happen. So you can kind of, it becomes a self-fulfilling prophecy. So that's the other thing to kind of be aware of. I want to quickly look at this chart here. Very, very simple chart, as usual, 2 lines. And I just want to show you that high yield bonds, which, as a fixed income guy, originally I look at the credit markets quite closely. And so you look at the fixed income markets and the blue line here is what we're going to focus on. It's not falling apart in any meaningful fashion. In fact, it's now at its highest level that it's been since, let's call it 2022. So the high yield market suggests that there continues to be risk appetite for high yield bonds. That is, however, something that can change pretty quickly, but you can see the red line, that's the New York Stock Exchange composite, so that's basically showing you really healthy market breadth, is also near all-time highs. So what we would want to see before we get more concerned is some sort of a downturn or at least lower highs in high yield in absolute terms, but also in relative terms, and we're just not seeing that yet. And so if we look at this just in the absolute terms, quickly, high yield, this is the same chart as before on the blue line, but just the blue line, if you will. We can be technical about it and draw some lines and things like that. That's typically not necessarily the way to do it with high yield, but either way, the point is we're continuing to move from the lower left to the upper right. We had an important higher low and almost exactly 1 year ago, and it continues to move higher. Now, again, that will change at some point, but right now, I just don't see it. And I expect a lot more machines to be coming into this market and buying things. And so one of the things that we are seeing is the algorithmic momentum trade. It continues to be in place. And again, I think we're going to see some volatility here for the foreseeable future, the next, still number of weeks or so. But at some point, and then there's algorithms, of course, trading there as well. But at some point, we're going to get another buying opportunity, and the algorithms are going to make that very, very clear. And we'll show you how that works in our view, how we like to look at when those algorithms might come in and start buying and what they might be buying, individual stocks, ETFs, futures, whatever. I'll show you guys how that works, or at least, again, how we do it using our B2 reversal indicator this week. So make sure you join us for that presentation. I think it'll be very informative. Make sure you join us there. I'll see you soon.